Happy Thursday out there, Team 42. It's your skipper here, Darius to present our macro minute for Thursday, September 19th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is the coast clear for stocks and other risk assets to rally sharply into year end? Our answers are the Fed's latest dot plot did what markets required it to do, which is pull forward projected rate cuts from 2026 and 2027 into 2024 and 2025. We've been among the most vocal investors across global Wall Street in calling for bonds to underperform stocks as a result of the Fed supporting our call for nominal GDP to surprise to the upside over the medium term. So far, so good. If we were right on our sanguine take regarding the growth and profit cycles, we expect crowded bullish positioning in stocks to be rebuilt in the coming months. The liquidity cycle is a wild card, as our model is not yet observing the explosive growth in global liquidity others are calling for. We do, however, expect both U.S. and global liquidity to accelerate markedly throughout 2025, the former due to TGA spin down post the January 1st lapse of the debt ceiling moratorium, and the latter due to a weak dollar facilitating greater stimulus in China, increased cross-border financing, and global dollar recycling from accelerated trade flows. As such, bulls merely need the growth and profit cycles to carry the baton into year end, which we think is doable. Transitioning to our 42 macro dashboard here, as always, wrapping up with a question from our community. This was not really a question, it's a comment, but it's a comment that we're grateful for. It allows us to sort of embellish a little bit what we do, which is very different than what the average investor is doing. And we make no bones about that. And quite frankly, it's better. So we'll keep it moving there. So this comment reads, spot on with Dr. Mo and Kiss. Congrats. Says, sir, once again, the signal slipped exactly at the correct moment. Anyone following Darius's research signals will be very happy if they open based on pre-market prices. For what it's worth, his signals changed Tuesday, September 17th, 2024. Based on what you invested in, looks like it's going to turn out to be a heavy green day. Amazing work, guys. Onward and upward. So thank you for the very kind feedback, my friend. Appreciate you guys. So yeah, like I said, what we built works. It's not going to work every time. If you're following our 42 macro signals, which if you're a retail investor, that's our KISS portfolio construction process. If you're a professional investor, that's our discretionary risk management overlay, aka Dr. Mo. If you're a sophisticated retail investor and you're too antsy, I guess, to just implement KISS, then obviously you can trade Dr. Mo as well. But we're really proud of those signals because they work. They're not going to work every time. You're not going to make money every minute of every day of every week of every month, or even every month of every year. But our signals will help you make money most of the time. And when there's no money to be made in asset markets, they will get you appropriately to the sidelines and or short the things that you need to be short so that you can make money that way, or at the bare minimum, protect the previous gains. And so, one final thing I'll say with respect to the comment, it says at the beginning of the comment, once again, the signal slipped exactly at the correct moment. Recall that our signals caused our clients to take down their risk to equities heading into the big correction we saw in July and August. And now we're, obviously taking up our signals there. So, and they cause our signals to take up the risk in the fixed income market heading into early June before the big rally in bonds that we're obviously benefiting from. So again, these signals aren't going to be perfect. They're not going to work all the time, but they're going to work most of the time, which is way more frequently than the average investor is experiencing in their portfolio. And so all we say is this: if you can't beat the hurdle rates that are implied by our signals, then why are you competing against our signals? You should just stop competing and start joining us. And we appreciate you and we welcome you to our wonderful investor community. We've got thousands of investors all over the world across the investor sophistication spectrum, all interacting with each other here in this community, and myself as well. So we're really grateful and humbled by that. We'll wrap it up there. Everyone have a wonderful day out there. Best of luck, and we'll catch you back here tomorrow. Cheers. Go Jets.